Welcome to this explainer on structuring your monthly CFO workflow. Look, if you're tired of operating in that state of constant, reactive client chaos, you know the one where every single phone call feels like an urgent fire you have to put out, well, you are definitely in the right place. Today, we're outlining the ultimate system to totally eliminate that chaos and help you step into a position of genuine, calm authority.
The framework we're unpacking today is adapted from some fantastic, comprehensive training materials from Bedrock 360. We're going to walk through the exact monthly cadence that takes raw, messy accounting data and actually turns it into executive-level, strategic decisions. It's a process specifically designed to make your advisory services not just scalable, but absolutely indispensable to your clients.
Here is our agenda for today. 1. From chaos to cadence. 2. Setting the clean baseline. 3. Prepping the dashboard. 4. The CFO client meeting. And finally, 5. Follow-up for action.
Let's dive right into Section 1, from chaos to cadence. Think about the traditional accountant for a second. The old role is essentially playing historian and reconciler, right? You're doing task-based work, generating monthly reports that merely state what's sitting in the account right now. You're looking in the rearview mirror. But the new role, the virtual CFO, is an interpreter. You're a strategist. You're shifting entirely to decision-based work. You aren't just reporting the past anymore, you're actively predicting what will likely be in that bank account 60 days from now. It is a complete, fundamental transformation from a task focus to a future focus.
But to actually act as that strategist, you can't just wing it. You absolutely must implement this exact 6-step monthly workflow. Close, review, interpret, prepare, meet, and follow up. This is your cadence. This provides that professional backbone your clients can rely on month after month, establishing a rhythm that completely stops you from constantly firefighting.
Moving on to Section 2, setting the clean baseline.
Okay, so the absolutely crucial point here is that a clean baseline is non-negotiable. Step 1 is the close. You have got to finalize the books to eliminate all that financial noise, because without a proper clean close, every single piece of your subsequent advisory work rests on incomplete or unstable information. It's like building a house on sand. You just cannot build strategic advice on a shaky foundation.
Once that baseline is completely clean and locked in, we move to Step 2, review. See, a CFO doesn't just casually read the numbers. A CFO actively hunts for significant variances and operational shifts. You are looking for trend changes and surprises way before you ever get on a call with the client. This ensures you have total situational awareness, meaning you are never going to be caught off guard in a meeting.
Section 3. Prepping the dashboard.
So, when you prep your dashboard in Steps 3 and 4, there is one golden rule: 5 to 7. That's it. You must filter those massive raw reports down to just 5 to 7 key numbers. Think things like revenue, gross margin, or cash position. Presenting a giant 50-row spreadsheet, that's literally just going to overwhelm the business owner. A truly decision-ready dashboard focuses their attention entirely on the vital few metrics that actually drive their business forward. To prep your headline insights for those 5 to 7 numbers, you have to ask yourself 4 strategic questions. The very first is, what changed this month? You need to pinpoint meaningful movement compared to last month or compared to the budget. This right here is the anchor of all your analysis.
Next up, you ask, why does it matter? You have to translate that financial change into real, tangible business terms. For example, if you noticed a 12% drop in revenue, okay, so what? Why does it matter? Well, it might mean the business is going to face severe cash pressure within 60 days. You have to connect the math on the page to the operational reality of the business.
The third question forces you to identify the stakes. What are the risks and opportunities? Because every financial shift creates a ripple effect. That drop in revenue we just talked about, that might reveal a massive risk regarding customer concentration. But hey, on the flip side, maybe it opens up an opportunity to reprice new engagements and protect your margins.
Finally, the fourth preparation question: what happens next? Essentially, what should the owner actually do? You need to take all your findings and translate them into a specific, actionable recommendation. A vague suggestion like, well, we should probably watch expenses, is pretty useless. You need a clear directive. Something like, we need to increase pricing for new clients beginning next month.
Which brings us to Section 4, the CFO client meeting.
I absolutely love this quote. A CFO does not just diagnose, a CFO prescribes. Your value to a client isn't just pointing out that expenses are running high.
Honestly, they probably already know that, or at least they feel it. Your true value is in delivering clear, confident direction on exactly what they need to change.
So, to prescribe effectively, use this three-part action formula natively when you speak. First, state the insight. Payroll is up 18%. Second, explain the implication. This is creating margin compression risk. And third, prescribe the next move. We need to review the staffing model before signing the next contract. Boom. It is specific, relevant, and entirely decision-oriented.
And please remember, when you open that 30-minute meeting, lead with the headline. Do not, I repeat, do not start with a data dump or read line by line through a P&L. Give them the absolute most important takeaway right out of the gate. This keeps the entire conversation firmly anchored on cash visibility and future decisions, rather than getting bogged down in task-based accounting jargon.
And that takes us to our final section, Section 5, Follow-up for Action.
Look, every single action item you prescribe absolutely must have these three elements documented to prevent tasks from just evaporating into thin air. You need a clear description, a named owner, and a specific deadline. So your follow-up note shouldn't just say fix pricing. No way. It should say review pricing for the new service tier, owner, the business owner, deadline by the end of the month. Without all three of those pieces, an action item is really just a wish.
And you must deliver this documented direction fast. Send your short, specific action plan within 24 hours of your meeting. You want to get this into the client's hands while the momentum from your conversation is still incredibly high. This ensures the brilliant strategic advice you just gave actually gets implemented.
I want to leave you with this final provocative thought to really challenge your current practice. Are you just giving your clients reports, or are you actually helping them make decisions? Because if you implement this 6-step cadence, close, review, interpret, prepare, meet, follow up, you will finally stop being a historian. You will step into your calm authority, deliver massive value, and frankly, start getting paid like the CFO you truly are. Thanks so much for joining me on this explainer, and I'll catch you next time.